Hello, today we are solving May 2024 paper question number 6 unit 2, the statement of financial position of Kowloon Tong Stores PLC on 31st March 2023 and 31st March 2024 are given below. Okay, this is given below. Now the first question part A, and there is an additional information. There has been changes, okay, in the investments, okay, loans and other things, okay. So after that they have asked part A, prepare the following sections of the statement of cash flow for the year ended 31st March 2024 for Kowloon Tong Stores PLC in accordance with International Accounting Standard IAS 7 cash flow statements. So we have to prepare cash flow from the from the financing activities. So from the financing activities, okay, you have to identify what and all has happened, okay, changes. So first one is, we can see that there was a redemption of shares, okay. The shareholders received the final dividend. So one is this dividend, okay, dividend received, everything to do with equity sections related to shares, okay. You will have to do identify it as financing activity. So first one is that this one is a financing activity. Redemption is this redemption of this ordinary share is also a financing activity. Then bank loan repayment, this is also going to come under the financing activity. You have only three sections: financing activity, operating activities and investment activities. Investments are when you're going to sell the property and when you're going to buy the properties. All those changes you will have to include in the investing sections. But here everything else is related to finance. Debenture, okay, was issued. So this is also this thing. And then ordinary interim dividend, one more interim dividend, this is also a financing section, okay. And preference shareholders were also paid their received their final dividends during the year. So these are all the sections, okay. So these are the sections that will go into the financing activities. So let's calculate that. First one is a redemption of shares. It says on 24th August 2023, a redemption of 2 million ordinary shares of 50 pence each at a premium of 12.5 pence or 0.125 per share was made, okay. So let's calculate, okay, redemption of the ordinary shares and redemption of the premium shares. This value we have to calculate. So that's going to be equal to 2 million, okay. There is a 2 million ordinary shares, okay. 2 million ordinary shares were redeemed. So 2 million, and they were redeemed at the rate of 50. So you have to see whether when you're redeeming a share, you're buying back the share, so cash is going to be lost from the company, okay. The company is going to pay some cash and buy back the shares. So this is going to appear as a negative cash outflow, okay. Any cash outflow from the company will appear as a negative, and anything cash inflow will appear as positive in the cash flow statements. So 2 million times 0.5, okay, 50 pence, that is 0.5 pounds, 0.5 pounds. So that is equal to 1 million, okay. 1 million was paid, worth of money was paid, okay. 1 million worth of money was paid. So to get back the shares, buy back those shares, okay, from the shareholders. And the share premium was redeemed at share pre 0.125. So 2 million, the amount, number of shares is 2 million, but it was redeemed at 0.125. So that is equal to, they had to pay 250,000, okay. Company had to pay 250,000. And then we have the repayment of the bank loan, okay. Let's see what is a bank loan. On 1st October 2023, bank loan repayments were made. So let's see how much was repaid, okay. Bank loan is going to come under the non-current liabilities. So it reduced from 1,850 million, okay, to 1.65 million. So let's find the difference, okay, that was repaid. So 1,860,000 minus 1,650,000. So that is equal to 200,000. So this much amount of money was paid, okay, paid back by the business. So cash outflow had happened, okay. So that is why you will put it as negative. Then issue of debenture. This is a cash inflow, okay. The issue of debenture is cash inflow. They got it into the company. So the 9% debenture was issued. So which means they got some loan. Debenture is a type of loan, okay. It's a bond that is got by the company and the worth of it is 500,000. So they got, okay, they got the loan of 500,000. Okay, this was got into the company. It was the loan was captured, so cash inflow happened into the company. Then the dividends were paid. So this is cash outflow. So how much of dividends was paid? First, it was paid a final. First one was the final dividend. Okay, 1.1 or 0.11 per share was paid. Okay, so per share was paid. So then let's calculate how many number of shares are there. So here we can see that there are 8, the cost is 8 million. Okay, the cost of the share, ordinary share, the value is 8 million divided by 0.5 pounds, that is equal to 16, okay, 16 million shares. Okay, the 16 million shares were there. So and each they had to pay dividend. So this was 8 million, okay, 8 million divided by 0.5, okay, that will give you the number of shares, okay, number of shares times what is the amount they paid. They are paying for the final dividend as 1.1 pence or 0.01 pounds. Okay, so that is equal to 176,000. Okay, this is a cash outflow by the company. So 176,000. Then interim dividend was paid. The interim dividend value was 0.4 pence per share. So 56,000 was paid. And then preferred shareholders we have to calculate. Okay, so the number of shareholders is 500,000 times they are paid at the rate of 5%. Okay, 5%. So that is equal to 5%. So 1.5. That is equal to 75,000 was paid. Okay, 75,000 dividend was paid. So you will have the net cash flow from the financing activity. The value is going to be equal to minus 1 million, okay, minus 250,000, minus 200,000 plus 500,000, minus 176,000 minus 56,000 and minus 75,000. So that is going to be equal to 1,257,000, okay, in negative activity. Then next one is investing activity, cash flow from the investing activity. So let's look at that. Here the cash flow from the investing activity is going to be everything that you have sold, okay, sold the property, the retail property, it was bought, one retail property was bought and one retail property was sold, okay, these are the investing activities. So let's calculate that. So payments made to acquire the tangible fixed asset, it was 2.2 million. So that is 200,000, okay, that is given. Then to 200,000 payments to acquire tangible fixed assets is given. Proceeds we have to calculate from the sale of this tangible asset. What was the proceed that you got? Okay, proceed you got from the getting the tangible asset. So proceed is calculated from, you should know the cost of the property sold plus the profit, okay, if you add you will get the proceeds. That is the formula for the proceeds that is going to come into the bank, okay, or the cash inflow that's going to happen. Now this one payments were made, so it is going to be negative, okay. So the payments to acquire results in cash outflow, okay, it results in cash outflow, so that is going to be negative. Then let's calculate what was the proceed that came into the bank of the business because of the sale of tangible fixed asset. So first we had to find the cost of the property sold, okay. So for this, first we have to know what is the beginning PPE, okay. What was the beginning PPE, property plant and equipment at cost? It was 15,431,000, okay. This was a beginning for PPE at on 31st March 2023. Then you would have done some purchase, okay. The purchase happened at 2.2 million, right? So the purchase happened at 2.2 million. So plus 200,000, okay. And then you will have to subtract the closing PPE, okay, the closing PPE. So let's add up these two first. Let's add up these two values to get the beginning PPE again, because you have purchased one asset. So that is going to be equal to 15 plus 431, okay, 1000 plus 2.2 million. So that is equal to 17,631,000, okay. Now at the ending it had changed to, at the ending PPE value had become 16,817. So let's less that, so you get the property of the asset sold. So that is equal to 16,817,000, okay. So generally what happens is, whatever is the formula here, the formula for finding the cost of the property sold, okay. So opening PPE, okay, opening PPE plus any purchases that happened, okay, minus anything that is sold, okay, will give you the closing PPE. So if you want to find the cost of the property that was sold, okay, sold, then you have to bring this opening PPE plus purchases minus closing PPE you have to do, so to get the cost of the property sold, okay. So 17,631,000 minus 16,801,000, that is equal to 814,000, okay. Then it had generated a profit that you will have to add. So the profit made from the sale was 215,000. So 215,000. Now let's add up these two. That is what you would have got into the bank as proceeds. So that is equal to 1029,000. Okay, 1029,000. Now this is a cash inflow into the business, so it is a positive value you will write. Now let's calculate the net cash flow that's happening due to this investing change. Okay, investing activities. Okay, that has happened. So 2.2 million minus 1.029 million, that is equal to 1171,000. Okay, 1171,000, and it is negative. Now the next one is calculate the total of operating activity sections of the statement of cash flows from the operating activities plus cash flow from the investing activities plus the cash flow from the financing activities, and that should be equivalent to the changes or to the cash and cash equivalents at the beginning and ending. Then what is the investing activity? The investing activity was this much. Okay, so let's put that. So the investing activity was 1171,000. Okay, then financing activity also there was a decrease, so let's write it here. Okay, we don't know what is operating activity, but we know what is the change in the cash and cash equivalents. Cash and cash equivalents, we can see at the beginning it was 186,000, at the ending it had become 24,000. So the change, okay, the overall change is equal to 186,000, okay, minus 24,000. So that is equal to 210,000. It has been turned into 210,000 decrease. Okay, so from 186 positive to it has become 24,000 liability. Okay, so the total decrease is 210,000 from the cash activity, cash flow activity. So the operating activity, if I take it as x plus this one, should have resulted in minus 210,000. So that is equal to, so x is should have resulted in minus 210,000. So that is equal to, so x is equal to, okay, x should be equal to 2,218,000.